This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices fell nearly $1 on Wednesday ahead of the U.S. Federal Reserve's interest rate decision, with investors uncertain when peak rates will be hit and how much of an impact it will have on energy demand. Prices fell despite a bigger-than-expected draw in U.S. oil stockpiles and weak U.S. shale output that indicated tight crude supply for the rest of 2023. Global benchmark Brent crude futures were last down 88 cents, or 0.9%, at $93.46 a barrel by 0650 GMT. Brent hit $95.96 on Tuesday, its highest since November.
India's crude oil imports fell for a third month in a row in August, government data showed on Tuesday, as refiners in the world's third biggest importer carried out maintenance and reduced shipments from Russia. Crude imports fell 3.9% month-on-month to 18.73 million metric tons in August, Petroleum Planning and Analysis Cell (PPAC) data showed. Imports are down, which was expected due to refinery maintenance, said LSEG analyst Ahsan ul-Haq. Higher prices for Russian oil could also have led to lower imports by Indian refiners, said Haq, adding that demand could nevertheless pick up during the festive season.
Moving on to the top news in the energy sector.
Growing oil demand and extended supply cuts have pushed the market into a deficit and will allow OPEC to sustain Brent crude prices in a range between $80 and $105 per barrel next year, Goldman Sachs said in a note on Wednesday. The Wall Street Investment Bank also raised its year-ahead Brent forecast to $100 a barrel from $93 earlier, citing modestly sharper inventory draws. The key reason is that significantly lower OPEC supply and higher demand more than offset significantly higher U.S. supply, Goldman analysts wrote.
High electricity costs and patchwork regulations are holding back global efforts to reduce reliance on oil and gas, such as clean hydrogen, the CEO of Spanish oil major Repsol said on Tuesday. Carbon capture technology, however, is already cheap enough to justify large-scale construction in some places, CEO Josu John Amaz said at the World Petroleum Congress in Calgary. He did not identify the places where it was affordable. We need an open-minded regulator, not banning some products, not promoting with a stick, promoting with a carrot, Amaz said.
Next, we have the top news in metal markets.
China's exports of germanium and gallium products in August plunged to zero, customs data showed on Wednesday, due to new export controls on the two chip-making metals. Beijing exported no wrought germanium products last month, compared to 8.63 metric tons in July when volumes more than doubled from June as overseas buyers rushed to lock in supply ahead of the curbs. There were also no exports of wrought gallium products in August. In July, exports were 5.15 tons and 7.67 tons in the same month in 2022, the data showed.
Iron ore futures edged higher on Wednesday after trading in a tight range, as signs of economic stabilization in China helped offset worries over the struggling property sector in the world's top steel producer. The most traded January iron ore on China's Dalian Commodity Exchange ended daytime trade 0.5% higher at 873 yuan and 50 fen, $119.69 per metric ton. On the Singapore Exchange, the benchmark October iron ore was up 1.4% at $121.85 per ton, as of 07:05 GMT, following two straight sessions of losses. We will now look at the top news in the agricultural sector. Chicago wheat rose on Wednesday, recouping some of this week's losses as uncertainty over supplies from Ukraine and expectations of lower output in key exporting countries supported prices. Corn lost ground, while soybeans inched higher with both markets likely to remain under pressure from advancing harvest in the U.S. There is likely to be further wheat production downgrade in Australia and Canada, a Sydney-based analyst said. Supplies could tighten towards the end of the year.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.